It is time now for the business news with Giles Beckford, who joins us from our Wellington studio. So, Giles, what did we get out of the Reserve Bank today?
Well, we got a policy statement that was decidedly dovish and an assertion by the Reserve Bank that their foot will remain firmly pressed to the floor. They've kept the cash rate steady as they promised to at 0.25%. It'll stay that level until March next year at least. But the bond buying program, this is the scheme where they buy government bonds on the secondary market. That makes sure that there's money going through the financial system, but also helps them try and keep a lid on lending rates. They expanded that from $60 billion through to $100 billion. Now, that's a bit more than people were expecting. So the hint of a surprise there. That shows just a level of concern that they have, the fact that they want to keep on the front foot. They want to keep adding stimulus to the economy. They also spelled out a little bit more detail, saying that they're preparing further tools for putting in place if needs be. One of those is negative interest rates, taking the cash rate below zero. And that would go hand in hand with a plan to lend money directly to the banks. So the Reserve Bank, of course, with the cash rate, say at 0.5% or minus 0.5%, would be essentially paying the banks to take money off it. But obviously, we'd have to say that retail customers and businesses wouldn't actually wouldn't see negative rates themselves, but it would keep that lid on borrowing costs, which is what it's all about for the Reserve Bank. We should also note that they've made mention today that they will extend the mortgage deferral scheme, which they're backing for the retail banks. We don't have details as to how long that will go on for. Details next week. But if it follows the Australian example, the scheme, which was due to run out next month, has been extended to the end of year in Australia. We might well see the same here. So all in all, a Reserve Bank on the front foot, saying it's willing to do whatever's necessary to keep the economy going, and emphasising the uncertainty. And the events overnight, of course, have just added to that stark warning.
Let's take a quick spin around the markets, Giles. What numbers have you got for us?
Share market had its worst session in a month. At one stage early on, it was down more than 2%. It's closed down 1.3%, 150 points at the 499. All the main stocks took a hit, but of course travel and tourism in particular. New Zealand dollar, it took a bit of a tumble after the Reserve Bank statement. 65.4 US cents, 91.9 Australian, and just a smidgen above 50 British pence.
Thanks, Giles. That's our business editor, Giles Beckford, joining us from our Wellington studio.